Morning, everybody. Welcome to the Opportunistic Trader. It's 7:30 on October 1st, and we're joined by Vince Lanci, who's going to be doing his daily report, The Gold Fix with Vince Lanci. It's all yours,
Hey,
Vince.
thanks so much. I'll see you at 8 o'clock. Good morning, everyone. This is Vince Lanci, the gold fix. Some people have asked where the gold fix phrase comes from. Looking at it rather cynically, like gold is fixed or manipulated. By introduction, there used to be something called the gold fix in London, and that was in the morning and the afternoon. Ironically, it was called, or appropriately, we can say it was called the gold fix. The price was fixed for gold for balance sheets in London, in the London bullion market. In the morning and the afternoon. So there was an AM gold fixed and a PM gold fixed. We'll just be fixing gold once today and every day. Any awkward pauses I make are going to be for me drinking coffee. I think we have the technology issue solved, knock on wood. And we're going to go through the markets in the following order. What we want to do daily as we get our own routine down here is we want to discuss immediately where gold is factually. What are some of the currency pairs behind the move today in gold, if there are any correlations? Move into the broader news that could be affecting gold today, and then move into from there a little bit of technical analysis from Michael Moore's analytics, and then we're going to go into trades in precious metals that were done by myself, people I advise, and other people in the opportunistic trader trade room, or as it's coming to be known, op trader, which I think is actually better than OT, an idea that I had. But op trader sounds pretty good. So why don't we get started? Okay. Before we go through actual charts, you can see my screen. This is basically a metals FX screen. So we have the dollar index up top. GC1 is gold futures. In this case, that'll be December. SI1 is silver December. Gold and silver, those are cash markets. We can discuss what type of software I'm using for this broadcast at another time. They don't pay me. I pay them, but that it's relatively cheap stuff. HG1, that's copper. Palladium, platinum, the yuan, onshore and offshore. Offshore is above it. We can discuss someday what the reasons are that there's an onshore and offshore, but it is actually key to getting an idea of what China's doing, although not necessarily gold. Doesn't affect all that much. US dollar, Japanese yen has been for the last several years the main dollar pair that correlates with gold. It has not been the thing that matters almost at all for gold in the last 5 months. And that has to do with the trade wars, the problems with China have superseded that. We'll discuss that. There is the euro trading at 116. The British pound sterling is at 130, as Larry frequently says. Where is the British pound? It's trading where it always trades, violently unchanged is what I would call it. Big movers today are the Canadian dollar. It says down 0.83%. What that means, if you're trying to get the FX pairs vernacular right, is it's stronger to the dollar. The Aussie dollar is not a big mover today. There's the ruble and then the Mexican peso. So what you have basically now is the dollar and the dollar peso, the Mexican peso and the Canadian dollar are the big movers this morning against the US dollar. Okay. The Turkish lira is at the bottom there. That's a representation of the emerging markets along with the Argentine peso. All right. A lot of uh, information today so you can follow tomorrow, because we're not going to be doing this, what I'm doing right now, every day. We're just going to be getting into the content during the day. But today I just wanted you to see this is the screen to discuss gold, its moves today, its moves Friday, and to look at some charts. The drivers behind precious metals are primarily FX pairs because gold is denominated in dollars. The other drivers are cash flows, like a country that has to sell gold or a central bank that has to buy gold, and what people call flights to safety or flights to quality, which I don't believe work very well in the short term, but do work very well in the long term. That's another topic to discuss, as in buying gold as a hedge for a stock market correction is not true. Does not work. Buying gold as a hedge for long-term bear markets, yes, does work, is true. We can get into details of that why later. I'm not the only person to say it, although it is my opinion. Smarter people than I have said it. One of the guys from The Big Short, Eisman, said it recently. So why don't we go through what's going on in gold today? All right. So gold futures. We're looking at an hourly chart. Gold is down from a COMEX close of, I think, 1196. The closes vary. I'll use different references because the official close is 1196.20, but I look at the market until Globex closes until 5 o'clock p.m. Eastern time. So gold is trading 1189.60, down from 1196.20 on the close. All right, just looking at this 1 hour chart, you can see that what it did on Friday, which is the run up from here to here, which is kindly called Friday Follies, seems to have been undone today. Now, the question as a trader you have to ask yourself is, after looking at the dollar pairs, you say, all right, the dollar's unchanged. Why is gold lower? And you have to start asking yourself this question every day if you're a trader. And if you want to actively trade gold, you can make a lot of money doing it. You just don't get many bites at the apple. So you have to take your time, keep your powder dry, and do what you have to do. So on Friday, actually, why don't we go back to Thursday? On Thursday, the 27th, I got a sell signal using a 4 hourly chart, and we sold on the OpTrader platform, on the OpTrader screens. We sold gold at about 1195.70. Actually, we did sell at 1195.70, and we covered half the position at 88.60, I think. The other half, or 87.60. 88.60, I'm sorry. And the other half, we let run and trailed our stop down to 1193, which was a technical number for us. Not a technical number. This is a momentum-based trading system. Now, we're not here to sell you anything. Truly, we're just explaining the difference between a momentum system and a technical system. And along the way, we're going to give insights, hopefully, that are helpful in making your own decisions about gold. So I got a sell signal on gold. I sold it. The market dropped. We actually advise a macro global fund that does a lot of what we do, and in much bigger size. They actually passed on this trade. The market moved sideways, and about right here, I got impatient, and I covered. I covered at the other half. I actually covered, and then the market sold off. I covered at like 1188 and a half, which is like the high of this move. The reason I covered is because if you look at the narrowing of the Bollinger Bands, it was, for me, too risky to be short volatility. In this case, that implied to have a position on it all. And 2 hours later, we had a nice rally, and that was a Friday rally, and that makes a lot of sense. Friday, if you're looking for monetary or cash flow patterns in multiple commodities, people have a lot shorter term, people, maybe algos, have a lot shorter term tolerance these days. And so get me out before the Friday close seems to be commonplace. Frequently, it manifests itself in gold as gold goes down for 4 days to simplify. And on Friday, weak shorts cover. There's plenty of strong shorts in this market, but weak shorts cover. And so you see that. All right. Today, over the night, gold has dropped a lot. It has given back almost all of its gains from Friday and is now hovering at what many people will see is the monthly, that dotted line, yellow line there. That is the monthly trend line that so many people look at. Now we'll look closely at that in a little bit when we get to the actual to the post I wrote on this concept. But right now, I think if you look at gold with the dollar nowhere, this is consistent with what I've seen for the past 2 weeks, not the past 5 months. Gold has been weaker for the past 5 months because of Venezuelan selling. That's a fact. Because of miners readjusting their hedges. That's conjecture, but I would say it's well founded. I believe a lawyer would say on information and observation and belief. Let's put it this way. I trade on that information. So skin in the game on imperfect information, I think is much more valuable than no skin in the game and spouting facts. So anyway, over the last 4 days, I digress a lot. Over the last 4 days, I noticed that when the U.S. dollar was weaker, gold was not bouncing as much as you would think, especially with all the shorts in the market. And when the dollar strengthened, gold it was any excuse for gold to sell off, and it would. And except for Friday's behavior, so this Friday. So my conclusion, it just added information, empirical evidence to the feeling that there's a trapped long above the market. Could it be a miner? Yes. Could it be a nation that owes money in dollars, and with the QT and the emerging market problems, it needs to create more liquidity in dollars to pay its debt? Yes. It's really not unlike, you have no cash, you have to pay your credit card bill, and so you sell the lace doilies that your great grandmother gave you for $1,000. Things of value uh, often get liquidated irrationally when you have liquidity crises. And a liquidity crisis, it sounds like it's the term, but it's not. It's a very important phrase. A liquidity crisis means you have solvency if you were to liquidate everything, but you are not liquid. We know that feeling. House poor, house rich, you hear terms like that. Well, if you're a country and you owe debt denominated in US dollars and there are less dollars floating out there, you start selling, chairs, you start selling, Steinway pianos, and you start selling gold to make that. Venezuela waited too long and had to sell their gold irrationally. I think that other emerging markets are also selling gold. And the reason that you don't know about this is because they do give their orders to big bullion banks that handle their orders professionally. They ease into the market, and like with Venezuela, which I think that order finished when we traded down to 1167. I think what happens is you'll see the market take on the selling in an orderly fashion, and the last bit of that order is sold hard so that they can beat the VWAP. You can look that up, or we can discuss another time. We'll be taking questions in a couple days, so I'll let the audience direct the conversation going forward. But today, I'm just going to blab on about this. So let's stay with gold here, and let's look at the fact that gold is lower and the dollar is unchanged. So Friday is being undone, and we are at, I believe, crucial levels that could determine the next $30 move. And by $30, I mean $30 lower as opposed to $10 higher. So why don't we get right to those numbers? All right, between 11 and this is technical analysis now. This is in part my information and in part Michael Moore's information. This is not momentum trading. Right now, actually, uh, uh, right now we're opening up a possible momentum signal lower, but it's not something I would trade uh, for different reasons. Okay, so we're at 1189. We're hovering at that yellow dotted line, and that yellow dotted line is a monthly trend line going back to, I don't know, before the beginning of time. So below 1189, we've got a serious problem. If we break below 1189, well, put it this way: you should be short below 1195, according to Michael. And this came out at 5 in the morning. So he talked about it the day before. I cannot say enough about how rare a good technician is. Michael Moore is a professional. His report costs $5,000 a month, and it's not just gold; it's energy as well. And his analysis is based on trend lines and volumes. So all technical analysis is subjective, and he knows that. So anyway, back to the actual numbers. All right, if we break below 1195, he says, uh, and break back above, we should have a nice short covering rally. Okay, we did not do that. You would have to make your own judgments when we break above 1195. Is it on heavy volume? Is it for an extended period of time? That's a subjectivity in it. Now, below 1185, 1189 was a number that I had, and that number is now lower on his system, and it moves down to 1185.60. So according to me, 1189 is a problem. And it's a problem because I believe it increases momentum lower. It's not a technical number for me. Michael's number is 1185. I would go with his number because my momentum system, while profitable, is wrong 50% of the time. We risk one to make two. So below 1185, it's a further sign of weakness on the day. That's a quote for him. Now, below 1185, the next number that matters, I think, for short-term day trader types is 1179 to 1178 area. And that's a Michael Moore generated number. So if you're trading this morning and gold is on your radar, you would consider being short here with a stop at a level that you would tolerate. For me, it would be 1193. I'm looking at it technically. You would consider getting shorter below 1185 or getting short for the first time below. And I think the best trade today on the downside is short below 1185 with a stop out at that yellow trend line, which comes in at about 1189. I think if you're short below 1185, if the market gives that to you, remember this is gold, it's not oil. You don't get 5 bites of the apple. If the market gives that to you today, you want to be short below 1185, and you want to look for your first level to buy at 1179. Now, that you say to yourself, well, I say to myself, well, that's only $6, and I agree, it's not much, but you're capturing $6 of a $12 range or more in a market that's got an average daily range last week, I think, of $7.20. But if you want to let it run, if you're playing on the downside and gold goes below 1185 and you say, okay, 1179 is a number that I like. Vince gave me that number. Michael gave him that number. These are good numbers. I like that number, but I'm certainly not going to cut my profit short. Well, you could always be short under 1188, 1185, any combination of the two, and you could be buying half at 1179. You could be buying half at 1179 and trailing your stop down to your sell levels, or you could just let it run because below 1179, I view 1179 as a minor possible exhaustion area. But below that, there's going to be momentum lower. So if we have, in the old Stoudemire terminology, a trend day lower, the market's not going to stop at 1179 today if it continues lower. I think you want to start looking at 1168. You want to look at that 1167 area where we made that low. I'll call that the op trader low, actually called by Larry, and citation is available. He put it out on Twitter. Really nice trade there. But so the downside kind of looks like this. You could be short here, or you could be short below 1185. You should be considering buying 1179. If not, you'd let it run, and you could put a stop in at your entry level. On the upside, I think a break back above this yellow line here is reason enough to be flat. I'm not a fan of being bullish on the day, but there's a lot of events out there that could make gold go up. On an hourly basis, which is what I'm focusing on today, you could, actually, if I'm getting a signal that's bearish right now on my momentum system, right now it says to get short. It's negated above 1190. So if I give you a number as a level to be short, below 1188, you want to be below 1189, you want to be short, and above 1190, you don't want to be short, which is a tight stop. It implies that maybe you want to be long above 1190. But there's a lot of upside in this market if we get above some certain levels. But there's a lot of congestion between here and there. There's a lot that I can talk about here, but I don't have a lot of time. So let's move on to some other aspects of this. All right. So we're going to look at this from a monthly basis. All right, and we'll go landscape for you here. Now, on the monthly chart, what you can see is those dotted yellow lines. Those are the lines that everyone has. And these other lines, any yellow line is a monthly line, a green line is a weekly line, and a white line is a daily line. All right, so when you take that back to a smaller view, right, you can see that we're still clinging to the weekly. We're moving away from the weekly and still hovering on the daily, but the monthly holds us up. Let's touch on silver for a second, because I think a lot of people that understand gold trade silver. I started in silver. It would be my baby, be my grandfather, so to speak. I've traded through the short squeeze in '94 when Fibro exercised out of the money calls. I traded in '97 when Buffett cornered the market. So I'm familiar with squeezes and manipulations, but silver has taken a beating compared to gold, and that's because it's not as much of a monetary asset. It has moneyness, but it's not money. Silver has given, sadly, a sell signal on the monthly chart. Now, that means for me, it really means buy volatility, not necessarily sell the market. But I want you to look at the weekly, because the weekly will give you a really good idea of what happened to silver. Silver was keeping pace with gold until we got to the 1530 area. Where is that? Let's put that on the daily. I had a nice little triangle. Okay, so if you see this area here, this area between, say, the 19th of July and the 10th of August, there was a ton of physical buying that was coming out of Asia, of all things, in silver, while there was no buying in gold, and that held silver up and it kept the ratio stable. But then once it was filled, the market is just falling off of a cliff. Silver, I believe, and I've said this before, silver leads gold in sustainable rallies, uh, provided it's not silver's not moving on its own accord because of spreads or what have you. So we're running tight on time, so why don't I just tighten this up? Okay, if you look at the markets again and not the charts, the new leader, the king of the metals, the canary in the coal mine, the tell, the give up, is palladium. Palladium now leads the metals. It is precious and it is industrial. We'll come to copper in a second. Silver follows palladium. Gold follows silver on the way up. On the way down, silver is now leading with gold following. Palladium is its own animal on the way down. I do not purport to know why, but people used to look at it and say, "Oh, if you're bullish gold, buy silver. If you're bullish silver, buy platinum." Well, that answer is now palladium. Now, you can't really trade palladium. It's not something I would advise to trade. It's the bid ask is too wide. But copper, for those of you that remember Dr. Copper, Dr. Copper still has his degree. It's actually a PhD now, and Copper tracks the Chinese markets. All right, so I'm putting a lot of different things at you here. So what I'd like to do is quickly go through the news and stories for last night that aren't big drivers for gold, but I think are something we should look at. Last night we had the new NAFTA was announced, and what that basically is, I think it's called the USMCA. The the Canadian dollar and Mexican peso extended pre-weekend gains on news that the new NAFTA deal had been struck. Basically, if you look at the way Trump operates, just to give you a little bit of trade observations, he talks loudly and he accepts small compromises. So he will, scream loudly, I want a million of something. He'll take 200 of something and then he'll go and he'll brag about it. So that is what came out of this. So the US dollar tested the Mexican peso 1850 area. Last month's low was set at 1840. So it's the fourth or fifth consecutive session that the dollar's lost ground to the peso. It's been falling for weeks. All right, we have 2 minutes, so I want to go through this article here. I would recommend people go to the site and click on Insights. I'm going to do it now. Click on Insights, right? Click on Insights twice so you can get the chronological order. And there's the overnight recap. That's sent out on our email list. I would say subscribe to the email list to receive this and other stories. No obligation, no cost, no spam. Okay, Here's our article on the NAFTA deal, a little bit more about NAFTA. And here is the weekly gold report that went out in the emails. Now, uh, uh, we can't get into this too much now, but here's the situation. In the last 12 days, from September 12th to September 25th, three bullion banks have come out bullish on gold, aggressively being bullish on gold. One mine has merged with another mine, and two hedge fund managers are now bullish on gold. All right, so everybody's bullish gold now. It's a quick overview. Okay, summary: commitment of traders reports bank commercials are not short gold, but they're starting to sell again. Um, bullion banks make money. Okay, that's an opinion. The world's largest hedge fund announced. Okay, so here's the gold charts. There's the monthly, which we discussed. All right, there's more detail there. Sickly but alive. All right, this gives a little idea of. Thank you so much, Mike. Why don't we just wrap this up? What I'd like to do is thank everyone for coming on. The audience is growing, and now that we're getting our technology straight, and we're going to be having people interact with us and make this a give and take type of situation, I would strongly recommend that you read this article. Yes, I wrote it, but read it because you can make your own opinion whether you agree or disagree. Okay, so here's the rest of the article. All right, actually, this all it gives the trade recommendation, and this was also on Zero Hedge picked this up for us as well. Why don't I go back to the markets right now, and let's go through the rest of the markets so people can get an idea. All right, so gold is still down 1189. All right, okay. All right, working around the globe quickly. All right, the 10-year bond is up a little bit in the U.S. Asian markets are up. European markets are up, which means I guess there's a little bit less pressure from Italy weighing on people. The S&P is up. What's new? The energy in the energy sector, natural gas is up 2.5%. These are all risk on type of concepts, and they're bearish for gold. Period. And risk off is not real. Right? Currencies are pretty much stable, and that's pretty much it. So my comment today on gold is, if you're trading the market, if you're trading gold today, you want to uh, be careful if you're day trading it on the long side. As long as we're below 1189, you want to be aware that 1185 is an area, and now we're 1190 right now, and you want to be a dip buyer in the 1175, 1179 area. In silver, below 1475, I think you're safe to be short, although I wouldn't short it at these levels. It's 7:58. Everyone, have a great day. Thank you so much for having me on, and I will see you same channel, same time tomorrow. Have a great day, and thank you. Over and out.